Do a short little market review here. I promise I won't keep you here too long. Daily chart is where we usually do most of our analysis, but we always try to have a bias determined from the weekly chart. So on the weekly chart, the last time we spoke about dollar index, I told you we would be looking for a price to want to draw above this short-term high for the buy side that's resting above there. I'm not convinced yet that it's going to continue up to take out this high. And there isn't really any inefficiency in here until we get to this level right there. And for me to expect it to go down to that level it doesn't feel right to do that and be bullish. Okay, so if it goes down here, I think it would go through it and then resume going lower. So what I'm stating is I'm neutral. I don't always have something that's going to be, from a higher time frame perspective, all that, well, trustworthy. Not in the sense that I can come out and say with a great deal of conviction, I believe it's going to go here next. Sometimes I have to wait. Sometimes I have to wait for Monday's trading. Sometimes I have to wait for maybe the middle of the week before I can get the information, or may not even have it at all this week, and it forces me to do just small little intraday scalping, which is fine. But when I'm doing a commentary, I really like to do the commentaries when I can point to where I believe it's going to go, and then we watch it all pan out over the course of the coming weeks or days. Right now is one of those periods where I simply don't know. It can do nothing. It could just go sideways here. And it's the month of August. We're trading in the last 2 weeks of August, but we're entering in a few short weeks some of the exciting times in trading, which is the fall months. So September, October, November, and into the close of the year in December. I think we're going to see a lot of interesting price runs, but we have to weather this last month of summer. And August traditionally is a month that in the early parts of my career, I hurt myself a lot financially. So I've developed a skill set and a comfort with dialing back the amount of action that I take during this month. So let's go into the daily chart here. Daily chart, you can see, had a lot of movement back in here. This is a balanced price range. We've moved back and forth in here. And there's a small little inefficiency right there. So if in fact we do reject this level, and I don't know if we're going to, I never really know how we're going to open on Sunday. That's one of the weaknesses I have in my abilities to read price. I have to submit myself to that because that uncertainty, I don't want to look unlearned because I'm trying to predict something that no one's going to know. No one knows where we're going to open up on any market on a Sunday. No one knows. Not one person. They're not going to know. And I have protocols and things I'd like to see. Sometimes if I'm really, really bullish, I'd like to see a gap open higher on Sunday and then trade down to fill in that gap and then resume. If I'm bearish and we're trading near a key level where buy side would be, I would love to see a level gap open higher in that sense, fill the gap, then try to rally again, make a slightly higher high, and then completely collapse. So those types of scenarios where I have procedures and things I like to see doesn't mean they're always going to manifest themselves on Sunday's opening. But apart from that, I try not to demand of myself any measure of precision for a Sunday opening. I don't know. No one's going to know. So there's only a few hours in Sunday's trading. And really, if you are trying to do whatever you have to do to find a winning trade just because the market just started to open up for the week, to me, it just screams gambler. Okay, so or impulsiveness. So we might go a little bit higher, take out this short-term high here. If we trade lower, we have a small little inefficiency right there. So because it could go to either one of them can be the draw on this week's dollar index. Because it's 50-50, I have to sit and wait and watch what we do on Monday. But either this for discount or this high here for premium. Those are my two key levels for dollar index. Hourly chart on dollar index, you can see we had buy side here, rally through it. Discount array is in the form of this fair value gap, buy side imbalance, sell side inefficiency. We trade down into it here, and we have a small little volume imbalance, which it traded into there. So even though we went outside of this inefficiency, the body stayed in, and while you're watching price action, you're looking to see, does it just reach into the volume imbalance and then pull away from it? Does it reach down into the order block here and then pull away from it? All those things were true here going into Thursday and Friday's trading. Market rallies up, takes the buy side out, hits it, creates a sell side imbalance, buy side inefficiency, SIBI. We trade up into it the latter portions of the day on Friday. And this overall has no real definitive, well, clear direction which one's going to run for. It could just chop around between this high and this low. Again, this high, this low, it could range in there throughout the course of Monday's trading. What we do and how we close on Monday will give me, hopefully, more insights about where we're going to reach for on that daily chart. 15-minute time frame. Okay, we see a breaker here after taking buy side. We're trading up into that there. So we have a small little 15-minute likelihood that we can take out relative equal lows here where sell side would reside, and then tap one more time that old hourly inefficiency. Again, that would be this one over here. Okay, so we're going to go back. So we could drop here, take that out, retouch this inefficiency from the hourly chart, and then if it wants to rally, I'd like to see it trade above that hourly inefficiency and treat it as an inversion fair value gap, find some support there, and then rally aggressively through this high and reach for that higher time frame weekly swing high. Euro dollar weekly chart. Okay, volume imbalance. Look how we've traded since mentioning that. You know, for months we were looking for it to trade up into that level. We did. We hit it, broke lower, sell side imbalance, buy side inefficiency, institutional order flow entry drill, which is a partial entry but less than half of the inefficiency or consequent encouragement that is institutional order flow entry drill. I know some of you are wondering, like, how do you know when it's going to use? And I'll have rules for that in my book. It's just too good to put in YouTube because there's so many people out there. Just go on Amazon, do a search on smart money concepts, ICT trading, ICT concepts. There's dozens of books already that people have parroted what I've said in partial, but they're not complete teachings. They're only introductions. So, yeah, that's the whole reason why I'm putting the books out, because I want to be able to be the definitive source, because these are all my creations. And I want to make sure that they're taught correctly. And once they come from my hands to yours, you'll know what you're supposed to be doing with them. And you'll see just how foolish these individuals have been trying to rush to get it in print before I do. But we traded up into that sell side imbalance, buy side inefficiency, institutional order flow entry drill there, and then we break aggressively lower, and we're trading just ahead or above this buy side imbalance, sell side inefficiency. Relative equal lows, you got sell side there. So I think it warrants, at least for the next 2 weeks in August, you know, we'll likely draw into this sell side and then dig into this area here. What will become interesting is if we break lower and find strength in dollar and then treat this buy side imbalance, sell side efficiency in the form of an inversion fair value gap at a later time, and then aggressively trade for here and here going into the fall months. That's something that I'm watching, because this looks very troubling for the bulls, and we'll have to see what we get over the course of the next few weeks and months for euro dollar, but I'm not bullish on it. Euro dollar daily chart. Okay, you can see how we traded up into that weekly SEBI, and then now we have a daily buy side imbalance, sell side inefficiency. We traded up into that inversion fair value gap, which this is what it's becoming here, treats it as resistance, and then we're just ahead. It didn't quite get into that inefficiency from the weekly chart, but we're seeing that we're very, very close to it. But this right here, all this movement like this is what I'm referring to, where that's a classic scenario for the month of August, where it's just a lot of give and take, and you don't get these really nice, clean price runs where it just goes and goes and goes, and you have to sit through a lot of back and forth price action. It's real hard to hold on to an intraday trade unless you're absolutely perfectly entered. Trailing stop losses are very tricky. It's basically an overcomplication of something that is easily avoided by simply not trying to trade or not trade very aggressively in the month of August. So gun in my head, I think we're going to reach below these relative equal lows and dig into this imbalance here in the blue, and how we trade after that, remains to be seen. Hourly chart, much like I've been mentioning, it's not real clear. Just a lot of back and forth consolidation. It looks like this inefficiency here, we traded into that, we broke lower to the sell side, fell short of reaching into the inefficiency on the weekly chart, which is in blue, traded back up, and then we're consolidating, so it's building buy side in here, and you can see that buy side here on the 15-minute time frame, relative equal highs. It looks like it would, in my mind, if it could go up there, hit that, wipe it out, and then aggressively sell off, that would be a scenario I'd like to see. If we get below this area here, I don't have it shaded on my chart, but here, have that annotated on your chart, so we break lower. If that acts as resistance, we'll call it the 1.0865 level. It needs to trade through it and then come back up into it. As long as it doesn't go back above this area here with the candlestick bodies on the 15-minute time frame, at that time, if we trade below it and touch it again as resistance, it should not trade back above it here if it's bearish. If it does go back above it, once gone below it, then it may act as your traditional fair value gap, which is what we would expect here in terms of bullishness. Right now, you can see both buy side is engineered and sell side is being engineered as well. So if you were looking at the chart right now and the market was live, price was moving around live right now, would you feel more comfortable being long or being short? Right now, I would favor a run to the buy side, but not because I want to see it go there and break out and continue. I would like to see it go up there and reject, come back down, take this area out here, treat it as resistance, and then run for this sell side and continue going lower with a higher dollar. That's me sharing like I do all the time, even though I don't have a hard bias yet. Gun to my head, this is how I teach my students. If I were to be asked at the time, like we're doing right here, before the market opens up, it's Saturday still, what would it be like for me to try to communicate to you my expectations is if it were right now trading live? What would I expect next? Reminding you that we are not trading live. We have not had a opening to the new trading week yet. It's Saturday. So the markets are not active. They're not moving. Okay, they're not open. But I try to show you, at least, gun to my head, and whether I'm right or wrong is irrelevant. But I try to always at least give you my views every single time I'm sitting down with you. S&P futures is our September contract. This is the weekly chart. Okay, we have an inversion fair value gap we trade up into here. This little tiny fair value gap, I like this one. I think that we'll likely still try to trade into that eventually. And over the fall, we may be going into a reason to get down into this level here. I don't see anything that needs to have us go back above this high here. So between this high and until we get down to here, I think it's better for me to be focusing on shorts. Notice how I said that? Better for me. Not that you should. Those levels in mind, plus now we have the daily chart here. We have a inversion fair value gap. We talked about this, and we were talking about it last week. So for Wednesday's commentary, I mentioned what we're looking for is we want to see the market trade up initially, create a juice swing, and sell off. And we got that. I was unable to do a Thursday or Friday market review, but I was commenting on Twitter, and I obviously did some executions and such, which we'll do a teaching on. I'll sit down and go over what I was doing in my live trades on Friday, so you can see that and what I was doing, what was my thought process at the time was sitting with my son trying to teach him how to correct things if you're offside and what signs indicate that you're offside. It'll be more insightful when we do that, but now just know that we were looking for lower prices. Go back and look at the reviews, go look at the tweets. None of us were focusing on moves higher in S&P or NASDAQ. Sell side was here. We dug down into that, and then the next one was here. Here is that inefficiency on the weekly chart. We just fell short of reaching that there. And then we had a nice retracement off the low formed on Friday, which is TGIF. Thank God it's Friday, which is my concept where the market will generally retrace 20 to 30% of the weekly range on Thursday into Friday, or Friday. If it makes a lower low on Friday, then it's later in the day on Friday that it'll happen. Generally around when London close occurs, so basically 10 to noon, it can start there. If it's consolidating during that time period, then it's the PM session. So TGIF is really just a expectation on how we retrace off of a down week and how far from the low, the lowest low up to that point, how far can it retrace back up? And it's 20 to 30%. All right, so let's go over into the hourly chart. All right, so here's the hourly chart, inversion fair value gap, small little inefficiency, we talked about it as well. Broke lower, consolidation all in here. We break down, small little inefficiency there, sell side and bounce, buy side inefficiency, it hits it there, breaks lower, this inefficiency here. We trade up into it, aggressively break lower. Now we have this gap here, we just touched that on Friday. Gun to my head, okay? I believe we're not done going lower. Do we go up into this a little bit deeper before going lower? Maybe. Does it need to? No. I'd like to see a gap open lower, make an attempt to fill the gap. Don't fill it entirely. Aggressively trade lower, below this low, and then dig in towards that 4,300, 4,310. S&P 15-minute time frame. Okay, here's that inefficiency we just saw on the hourly chart, and now we have a small inefficiency there, where you can see price did run for the buy side, reached up into it there, and now we're in this sloppy. Friday was actually a very, very difficult day for me to teach and point out things in advance. I had to really focus to do the executions I did on Friday, and I'll cover that in the teaching that we'll do tomorrow on Sunday. So it just basically, why I did what I did, why I placed my stop where I placed it, and some of the clues that you can see in price action that help me and help me teach my students how to determine when you're offside in a trade. That means when you get a trade on and it's telling you you're probably not going to be profitable in that trade, how do you see that? What do you pick up on that? And what are you supposed to be doing when you encounter that? 5-minute chart S&P, inefficiency here after taking the sell side. And then these relative equal lows here, I'm sure you probably were expecting them to be swiped on Friday. It's real hard to expect that when we have a big range down movement in the week, and it made the low of the week so far on Friday. And then we have a shift in market structure here after taking sell side, rallies up, comes back down in, order block here, rallies, and then you start seeing what? Down close candle supporting price. It does here, and it's got a fair value gap, so that's a high probability bullish order block. Rallies up, trades off of a breaker. We have a bullish breaker here. Hits it here and here, but it's anchored to this inefficiency. We are not supply and demand. We're cutting through all this stuff to get to the narrative. This right here. Why is this fair value gap being selected? This is an old low where sell side resided. So every time we have a shift in market structure that occurs back above an old area where we would expect sell side to exist, and that inefficiency is laid right over top of that, when price trades back above it, it's going to act as what? An inversion fair value gap. And you couple that with TGIF, which is, thank God it's Friday, it's usually going to be a 20 to 30% retracement on the weekly range. and we've been going lower all week. We've been calling it lower all week. It's been delivering like gangbusters. There you go. And you've been watching it on a live account, building and building and building. So we rallied up. The bodies, look at the bodies here. It's respecting what? This gap. The wicks do what? Just outside the line that's defined by the low of it here. This is normal. I teach this as like a mohawk. Okay, a little tiny little deviation outside of what would be expected is perfect, but this is perfectly acceptable. This is perfectly acceptable. We watch the candles and where their bodies reside. That's the narrative. That tells you the real storyline and what price is likely to continuously do. Market rallies again. Find some support at down close candles. Order block, rallies, takes the buy side over here. Later in the day, digs up into that inefficiency as well. NASDAQ weekly chart, bearish order block, breaker. And I talked about this at the time. Go back and look at the old reviews. You should have actually this in your charts. But this down close candle here is the bearish breaker. The market trades all the way up. Small little mohawk outside the range that is defined by that candle's high. And then we had what? The market deliver a down close weekly candle. A lot of movement to the downside. So if you measure this high to the low of the week, you're going to see 20 to 30% of that range it retraces. And I'll teach more about the details as to why that is in my book. If we continue lower, and I think we're probably going to do that going into the fall months, this is where our focus is. Okay, remember the old weekly volume imbalances that we were looking for, digging into higher highs for NASDAQ and S&P for months, all through the summer and late spring. We were looking for that higher price. Now we have that same thing happening, but just in reverse. We're looking for it to dig down into this deep discount, buy side of balance, sell side inefficiency that's shaded here. So this is my long-term, intermediate term, my quarterly shift objective. In other words, in the next 2 to 3 months, where I think price is going to reach for, it's here. So everything is going to be leaning on the likelihood of that we're going to try to trade down into this level here in the coming weeks and months. Daily chart NASDAQ. Here's that weekly bearish order block. It trades to it here. We break down. Here's a weekly breaker that's shaded in gray. And I saw a couple comments, and I mentioned this the last time we talked on, I don't know if it's a live stream or if it was a recorded version like I'm doing here. There are folks that are basically saying this is complicated. You know, and I'm putting these ranges on so that way you can study how, from a top-down analysis, okay, what you're supposed to be noticing and seeing how price is respecting higher time frame PD arrays. Okay, you can clearly see this is not classic support resistance, has nothing to do with retail, and Wyckoff doesn't exist in this. This is all my stuff. These are very specific elements to price delivery. They're codified concepts by me, they're authored, and the algorithm will follow that. When you look for these things in price action, in backtesting, the only way you're going to learn how to do this is by dressing your chart repeatedly for months. And you're going to feel like it's unproductive. That's normal. If you've rushed to try to trade before knowing what you're doing, don't complain to me on Twitter, because there's a person that I've been very kind to and trying to encourage them not to be so hard and judgmental on themselves. But that type of thing gets you muted. I don't want to see that, because it's basically saying that you're not listening. And I'm not going to waste any more of my emotion and concern for people that are not going to listen. It's not that I'm not sympathetic, because I am sympathetic, but I know that I'm dealing with someone that is incapable at the time to follow instructions. So I have to leave them in their ignorance. As much as I don't want to do that, I have to do that, because I can't reach them beyond what I'm already doing. When there's other people that are listening, they're taking note that I'm telling you not to trade in the month of August. And then, I lost more money. I can never get this. This is so complicated. Tell me, look at his charts, and you tell me, does this make sense to you? It makes sense to everybody that's been doing the work. For the people that have not deciphered what it is I'm showing, it's because they haven't done this enough. Look at the reaction here. This is the high of the candle that sets the tone for the high of the bearish breaker. Let me go back up to the weekly chart. This one here, okay? That candlestick's high and that candlestick's low. That's what I'm shading here in gray. That range, if we apply it to the daily chart, because right now we're on the weekly chart, if we drop down to the daily chart, that range across all the candlesticks that are seen by the medium of a daily chart, so every candlestick here represents one full daily range, high and low. When we trade into that, once we get into it here, it's respecting the high of it there. And then does what? It trades to the low of it and outside of it. And then the next candle here, we open, we trade up into it, and then it offers resistance and sends price lower. You will not appreciate the benefits of seeing price like this until you put the work in and dress your charts up. There's a lot of you that will talk the good game of, yeah, I back test, I do this, I do that. But in 2-3 weeks after you do that, you're going to be on Twitter, you're going to be on social media and complaining how you've messed up or nothing's making sense to you now. Or worse, go on YouTube, on your YouTube channel, in your bathrobe, wearing the bathrobe hood, which I don't know how that even exists, complaining about how smart money concepts are a lie and you're going to go to trade price action and talk about trades you really didn't take and pretend you made money. And you're going to show examples on your chart with the long and short application that TradingView, which is not even a trade. It's just you drawing over top of a chart and saying you took a trade. That's the cycle of the failed ICT students. They do that same thing all the time. And it's because you aren't doing this part of it here. And you're not submitting to the time that's required for you to get to your understanding and trusting what it is that you're supposed to be seeing in price action. This is not easy, folks. There's a rhyme and reason as to why price does what it does. But you can't ascertain what that is until you submit to a lot of tedious back testing and journaling and studying what price has done here. What does price likely have ahead in terms of the coming week? And how can I see that? And how close am I when the week ends? How close was I in terms of my expectations? See, I'm lending you my experience, but I'm also reminding you that we're in a time when the summer month of August, it can be very, well, choppy, back and forth types of price action. It still can be traded with someone with a lot of nimbleness and experience, but you can't watch my videos, be a new student, new viewer, and think just because you watched the video, you know how to do it, and go out there and try to trade with a real money account or try to get a funded account in August. Never try to do that. I know the funded companies right now are holding up their crucifixes to me now saying, shh, don't talk like that. But it's just facts, folks. You don't want to be trying to get a funded account in the summer months. Okay, you don't want to do it. You'll find that it's a lot easier when the markets are a lot more fluid in spring months and in the fall. And we're going to go into the fall. So I believe we're going to have a whole lot more favorable price action. But it's getting back to this discussion here because we're starting to do a Twitter space, and that's not where we're at now. We have a buy side imbalance, sell side efficiency here, which acted as support there. Now we traded through it. So I'm having this area drawn out and have your attention treating this as a potential inversion fair value gap, meaning that we can come up into that, trade into it. I'd like it to stay completely open from this low here to about half of the range of that shaded area in orange to that low. So about halfway of that. I like to see that portion from here to here stay open. It doesn't need to do that for it to remain bearish. I just would like to see that. This needs to stay open because then I'll trust this as a breakaway gap. This, I'll treat that as a measuring gap. So from high to low down here where I'm expecting it to draw to, this could be, again, half of the move. So that's how I'm looking at it in terms of classifying a measuring gap versus a breakaway gap. Four-hour chart. Now, I did not have a 4-hour chart on the S&P. I know some of you are like, why didn't you do that? I just don't want to do it. Here's that for logic. Here we have this inefficiency right in here. We're going to show you where this is. Here's relative equal lows, and we saw price drop down into that there. This inefficiency on the hourly chart occurred on the 8th. So June 8th, this inefficiency, that's the levels I'm showing you when we show the chart again. That's this over here. Okay, so it dug down into that Friday. So we've gone below an old low. We dug down into the only inefficiency that exists on the hourly chart. And we have a little bit of inefficiency here that we dug up into. And we're going to zoom in now on an hourly chart here. Took buy side out there. And we have this wick. I would like for it to trade below the consequent correction of that wick and then treat it as resistance and sell aggressively lower and then dig into the 14,420, 430 area. Okay, that's what I'd like to see. I would like it to become very similar to what we're showing here, like where we went up, broke hard, came back up, and then sell off. I'd like to see that type of delivery here. I would like that. I would be very satisfied to see that. But if we have to go higher first, then I would not want to see, it go above this potentially in terms of inversion fair value gap, which is that shaded orange area. I don't want to see it trade above that. So if it trades above that, then I'm a little leery about this being a draw on liquidity for the week. But this is why we bounced here, and I'm expecting it to trade through that. I'd like to see lower prices going into this week and the following week as well. 15-minute time frame again. Here's the relative equal highs, buy sides taken. They're very, very choppy, difficult Friday. It was very hard for me to be able to sit down and point things out to you on Twitter like I've done many times over this year and last. It would have required a whole lot more understanding about price action, and I would have probably confused many of you. So I just left it alone and did my own executions and shared that recording on Twitter. And then I did a silent upload prior to this video here where you can watch me actually trading. The lecture I'm going to do tomorrow, I hope we'll have that video up by 6 p.m. my local time tomorrow. If not, it'll be on before I go to bed. But I'll walk you through what I was thinking, how I was doing what I was doing, why I was doing what I was doing. And it'll be as close as I can to be what I was being helpful in terms of teaching my son how to navigate, move from one bias to the next. Okay, if you get into a trade and it's suddenly unfavorable, how do you see it? How do you navigate it? What do you do to reverse everything and start working towards the other side of the PD matrix? So that's the lecture tomorrow. But just a lot of back and forth price action in here. And we'll drop down into a 5-minute chart. This is pretty much the backbone of what it was I was looking at while watching the S&P yesterday. So you can see in my execution I had the S&P on the left-hand side and I had NASDAQ on the right-hand side. So I was watching both markets but trading the S&P. And I'll go into as to why I was trading the S&P versus the NASDAQ. That'll all be part of lecture discussion tomorrow. But we had inefficiency here, traded back down into it there, rallied up, and the inefficiency there, inversion fair value gap. We hit it there, and notice the bodies of the candle respecting that. And then the wick down here. And then this is a bullish breaker. So we had a low, high, lower low. We traded above it. The body, up close candle, draw that out. Look at the bodies respecting it there. Sends it higher. Order block, hits it. Relative equal highs, there's buy side. Relative equal highs, there's buy side. And then buy side up here. And it's kept digging it higher, 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 higher. And then boom, delivering to TGIF objectives for the weekly range. 30-20% of the down close candle that was making our weekly chart candlestick for NASDAQ. It retraced up 20-30% on its range. And that's what you see here. And then it came off the highs going into the close for Friday. All right, folks, that's it for this one. I hope you found it insightful. Until I talk to you next time, be safe.